And I think I want to get this question to you. What do you think people are leaving behind in the crypto space? I think some people may have felt like the boat has sort of gone out to sea when you see Bitcoin going to the moon and that sort of thing. What are people leaving behind if they don't get in on this?
If they don't get in on it, they're leaving behind at a top level the biggest revolution that we've seen in the internet and money, and the mix of those two combined, that we will ever see in our lifetimes. This is actually a revolution in technology and a new way of doing things. So it's not just an investment, it's actually a really broad-reaching thing. And that's Bitcoin plus Ethereum and all the other parts of this digital asset network. But in terms of price, if we look at the previous cycles after they halved the supply of Bitcoin, called the halving cycle, happens every few years and it's predictable and forecastable, the price tends to go up 10, 20, 50x. And it would suggest that the price still has maybe another 400% to go, maybe even more this year, right? There's no asset that looks like this. Sure, you can speculate in options in gaming stocks or whatever it may be.
Yeah.
But nothing as a $1 trillion asset class has this kind of upside. So that's the potential that's there. So even if you think, well, what happens if it falls 50%? So 50% is your downside and your upside is 400%.
And you talked about in terms of changing money. Is this a threat to the US dollar, or will this remain sort of two different things in different universes?
In a longer term, in a 20-year horizon, yes, it is a threat to the dollar. But, nobody wants their dollar to go up and down 5% a day, which is what Bitcoin does.
Yeah.
It's not stable. It's a store of value. It's more like gold right now. And its very existence caused the central banks, like the Federal Reserve, to set up their own versions of digital currencies. So it all starts slotting into this new digital world. So they understand that it's there, that people want to use it, people want to save in it, make investments, but they also want to make sure that it exists as part of the system that is already in place, because they want your taxes, obviously.
Yeah. Now, as you say, I mean, as something is appreciating in value, why would I want to spend it, right? I might want to just hold on to it and let it to keep accumulating, right? So is there's something probably out there coming in the next couple of years that we don't even that we don't know about, or do you have your eye on maybe something maybe that's the Bitcoin of 2013 that might be used, or maybe the next big asset, or something that could actually be used as money?
So look, Bitcoin is one thing which might be the store of value that might turn to money. But there's a whole world of digital assets out there. And many people watching this have seen everything from these digital pieces of art called non-fungible tokens. One of those sold today for $69 million. That's one thing. There's platforms like Ethereum where people are building the future of the internet of value. Mm-hmm. These things have real value. There are also other protocols, tokens, platforms that let all of these different things speak to each other. Like you and I don't know what computer you're on. I don't know what internet provider you're on. And we don't care, right?
Right.
Because it's called interoperability. That whole layer is going to come too. So we're not worrying about Bitcoin. We won't want to invest in it. But if I want to send you money, I don't care how it happens. Or if you want to charge for this video and make it instantly streaming, it may happen over Ethereum, but nobody cares. You care because you get the money at the end of it.
Right.
So there is a huge world of this that's all coming. So, I'm a big fan of Ethereum, and I'm a big fan of a lot of these other projects. Problem is when you go further out on the risk curve, you don't know which ones are going to really survive and get the network effects.
Yeah.
But Ethereum clearly has got the network effect. Bitcoin has. This whole space now is 1.7 trillion. If we compare it to the global equity market or global bond market, those are kind of 300 or 400 trillion in size. So you can see how big this can actually get over the next 10, 20 years.
And that makes me think, do I even need to understand how this all works necessarily? I mean, I should, as opposed to like, well, I don't really get the blockchain. This doesn't really make sense to me. Raoul's talking about interoperability and connecting computers and all that. I don't really quite get how that works. It might be a bit technical, but if it makes me money, that's certainly a good thing, right?
Yeah, and I think obviously you don't do things blindly. You have to have
Yep.
a basic understanding of what it is. But none of us understand the technology behind Google, but we own Google shares
Right.
because we understand where it's going or what it represents as a business. So if you just think in those terms, what does this digital asset space mean? Well, it means a potential future of the internet of money and the internet of value. If you think, yeah, I get that, this could be really huge, then you buy a few of these tokens and hold on to them. The hard thing is if you think you're going to be a trader, you're going to be that new wizard who buys and sells this stuff, you will end up buying and selling your way into poverty. The best thing to do is buy and hold it.
Makes sense. Now, I've seen a prediction from you. I believe this was from a couple of months ago. Bitcoin could hit 1 million by, I think it was 2025. Are you still on that?
Yeah, I mean, that's basically following the trend line, the logarithmic trend line that it's been following since its inception. So I'm not saying anything racy. It just sounds like a big number.
Yeah.
But it would make sense. Now, we will have a big down cycle before we get there as well. And that's normal too. Those are some of the features of the Bitcoin price cycle. You know, it tends to explode up, it then comes down a lot, and then it starts building again. And that next cycle should get to $1 million, maybe more. Who knows?
A little bit of a side point here. You mentioned gaming stocks. I'm thinking particularly of GameStop. But just a quick thing is that seemed to be a sort of, I guess, democratization a little bit of investing of a bunch of little guys coming together. Is that sort of like what we're seeing in this digital revolution? Is that sort of in the same frame, the same vein?
What's amazing is imagine being able to own a share of the internet, not Google, but the internet, or a share of the monetary system. That's what this is. That's how democratizing it is. So it's not like you can own a stock and doesn't that make me feel free and liberated and democratized? No, this is owning a stake of the future. It's something much bigger. It's the most democratic investment I think we've ever had. And it's extraordinary because also people might go, but I can't afford to spend $50,000 on Bitcoin.
Right.
The magic is it goes down to 8 decimal places. So you can put in $10 and you can save $10 every month, or you can save $1,000 every month, or you can buy a whole Bitcoin. So that makes it also democratic because shares, you can't do that. Fractional shares, they're coming. And, you know, some of the platforms like Robinhood have fractional shares, but this by definition is fractional. So it makes it affordable to even the poorest person.
Fascinating. Now, I want to move to the more traditional, the stodgy stock market. That's old school, I guess, but it still is very important. Now, I'm thinking about sort of the Dow. It gets a little bit of bumps in the road. There's certainly been rising inflation fears, but then it just seems to creep back up to all-time highs. And I think there's sort of two, just to make it really simple, there's sort of two camps that say, well, as long as the Fed is printing money, this thing is going to go up, up, and away. And then there's another side saying, no, this is not going to end well with all this central bank intervention, leading to the question, is there a bubble in the stock market, Raoul?
Yes and no. Yes, because the speculative activity is almost the highest on record, or if not the highest on record, above and beyond what we saw in 2000 in the dot-com bubble. So there's too many people buying options, too many people punting stocks that are valueless, hedge funds with too much exposure, mutual funds with too little cash. It's all in the market. Everyone's all in. So is there the potential for this whole thing to have a sharp, nasty unwind? Mm-hmm. Yes. But over time, the stock market is reflecting something else, something much more important, which is the rise of central banks and their balance sheets, i.e. the printing of money. Many people talk about, well, it's inflationary, yet CPI doesn't go up a lot. Right. But people feel poorer. What's going on? Well, the magic is when you move away from using the US dollar as the denominator of something and use the central bank balance sheet where there's all this excessive supply. So if you divide the S&P 500 by the Fed's balance sheet, what happened is, and this feels like it actually is in reality for all of us, the stock market never really recovered from 2008. It trades in a sideways range, little booms, little busts. And what it's basically saying is almost all of the growth in the stock market is the central bank balance sheet.
Yeah.
The same applies to gold. It's kind of offsets the central bank balance sheet. The same applies to many other things. The only thing it doesn't apply to is Bitcoin. Bitcoin is the only asset that has protected people from the loss of global purchasing power of fiat currencies that have been printed to excess. So that means that if the central banks continue, the price denominator makes it look like the market's rising. So for people who've seen that the Venezuelan stock market once went up, thousands of percent.
Yeah.
But once you take it away from being in Venezuelan bolivars and put it in US dollars, it had gone down. It's the same thing. It's what your denominator is. So that is a bubble in central banking and not a bubble in the stock market. There is a short-term bubble in the stock market.
And then that would mean that, well, I guess if we don't want a market crash, then central banks do have to keep printing. How do they unwind this?
And there is the problem. So there is no unwind. So there's their version of the unwind, which is, okay, if we can just keep going and hold this together, then maybe we can get inflation slightly higher, and over time, the value of this debt will disappear. Like somebody's parents who had a mortgage in 1970, the mortgage suddenly looks laughable now because inflation got rid of it. So they're hoping for that, hoping they can raise some taxes and hoping they can keep printing some more money to make the ability to pay all this debt back easier. That's their bet. The world is taking another bet, and that's we can build a parallel financial universe at the same time, and we can choose to opt out. And that's what's going on in the digital asset space, and that's what's going on in Bitcoin. It's a whole parallel financial system with borrowing, lending, clearing, custody, transaction, everything is all built on this new universe. And slowly, people are going to migrate across.